Hello, everyone, and welcome back to a new series of UNAJUA. I am Alexandra Nyamoyavoyi, and before we get into it, let me wish you a great return to work or school, hopefully in a face-to-face setting. Hopefully? This is UNAJUA, where we offer minimal actionable responses to important questions in about 15 minutes or less, and since our last series, we added some tokens in the mix. You're welcome. In today's episode, meet Henry Mascot, the founder and CEO of Carousel, an insurance technology platform that uses artificial intelligence to power claims processing and fraud management in Africa. The company has secured $450K in pre-seeding funding with two lead investors, Consonance Investment Managers and Atlantica Ventures. Carousel works with 800 hospitals in Nigeria, Ghana, and Uganda and plans to expand in 10 countries by the end of the year. Among their clients, AXA Monsar, Liberty Health, and Old Mutual. For a chance to earn some African Tech Roundup token, here's a question you need to answer. What is the average percentage of GDP or GWP, gross written premiums, of penetration in the insurance industry in Africa? Stay listening to the end of the episode for the answer. Then, fill out the Google form linked in the show notes with your name, email address, Silo address, and the correct answer to today's question. If you don't already have a social token wallet and Silo address, get with the program by signing up at wallet.socialstack.co. Is technology improving insurance penetration in Africa? Henry will be factoring in on two questions. What is the current state of Africa's insurance market? And what are the reasons behind low penetration and inclusion?
So what's the current state of Africa's insurance, right? So I think this is penetration across the continent is still, to some extent, pretty low. Insurance is early stages in the continent at the moment. But again, this is reflective of stage of development or economic development across the whole continent. So this isn't just insurance. This is just like most industries are early, right? In terms of their development in the continent, which is why generally Africa is an emerging market or a growth market as well. So what does this mean? Like the gross written premium, so the reports on insurance from about 2 years ago to some extent, puts the gross written premiums in Africa somewhere around $68 billion, give or take. Right, and by gross written premiums, we basically, it means the amount that people have paid to buy insurance. So how much have people invested or paying annually to be able to insure themselves or their property as well. So this is also spread out across, the lion's share of this is spread across a few countries, somewhere around 8 countries to some extent. South Africa has the lion's share of that, closely followed by countries like Nigeria, Kenya, Namibia. Most of this is still life insurance. So I think somewhere around 60% of gross written premium, 40 to 60% of the gross written premiums or GWP is still life insurance, while about 40% or so is life, non-life insurance. By non-life, we're talking about general, auto, property, health insurance, and so on and so forth. When you compare this to what is happening in other parts of the world, so insurance is looked at as mostly what is the percentage of your GDP that you're currently spending on insurance, what percentage of your GDP is your GWP. And currently across more mature markets or just across the world, the average sits somewhere around 6%, 8%, something like that. While for Africa, we're still somewhere around 1 point something 2%. Okay, 2-ish 3%. So from 1 to 3 averagely across the continent. Certain markets have way more. South Africa sits somewhere around 13 to 15%. Kenya sits somewhere around 6 to 8%. Nigeria sits somewhere around So across multiple countries have their own percentages. And obviously, it's worthy to note that our GDP across most markets are tiny compared to more mature markets. So, if they're doing 6% of those huge GDPs, it gives us a sense of how much that's actually being invested. I think there's a report that was saying that the insurance or the GWP for insurance in globally somewhere around 11 times what it's currently been. So it just shows us a state of where that is. But again, the good part of this is that insurance on the continent is experiencing faster growth compared to other markets, right? You can see different numbers across different reports, but most put it at some level of a double digit 14%-ish growth. This is pre-COVID. Obviously, with COVID, it slowed down a little bit, but it was growing faster than most places in the world. So that's the good part of it, is insurance in Africa is still very early, but is also growing faster than most places across the world. When you look at sort of like the literature out there as well as to why there's there are different reasons. Obviously, I'm going to share a few that I think as well, that are some of them are consistent with thought leaders think. Some of them are my thoughts. So, like I said in the beginning as well, with the first one of the first questions, which is insurance also reflects, the level of insurance also reflects the economic realities of the continent as well. So the first reason would obviously be macroeconomics, right? If we dig down a little bit of history on insurance is, was first of all, I think, a B2B product. That was, first of all, would be like if you're a merchant. I think some people have also said sometimes it was like slave owners, but merchants, right? Like you're moving your goods, so you're going across the ocean to buy goods and ferry back to your continent, which would typically be the Americas of Europe. As you're setting out to go do these things, you pretty much say, okay, you insure the ship, or you insure that you won't lose whatever at sea. So it was mostly a B2B product, and I kind of like went through to like the rich. And right now it's mostly seen as a middle class product, which is, when you look at Maslow's hierarchy of needs, you've kind of like passed that survival mode, and then you have a bit of money and you can say, hey, let me insure my future, right? Let me insure, or let me hedge my risk, right? I have more money, I have a bit of money now, so let me, sort of like protect myself. So to some extent, there's that part of insurance that always is tied to or reflects the economic, maturity of a person or an organization or of a country as well. So macroeconomics plays a large role. Most of Africa's economies are still also very early from an economic standpoint. The GDPs are not, they're growing quickly, but they're also not that much, compared to bigger economies, right? So that's one state. It also shows across the continent. So when you sort of like look at some countries like South Africa, where you have, a lot of penetration, or the highest penetration on the continent, when you look at it, you also see that it's also because they have a large middle class. So you can also have more people who have disposable income who can now buy insurance. So the macroeconomics plays a large role. There are a few other things that play a huge role as well. One of it is also culture, and culture from two extents as well. The first would be we're quite community based, right? On the continent as compared to the West, to the US that has a slightly more individualistic, or Europe where people don't rely so much on family to some extent. Africa is still, and most of Asia as well, still very community based, extended families. So again, it also reflects, so again, this is generally a state of life, and it also is reflected in the way the way people think about risk on the continent as well. So a good example would be that a parent would pretty much invest all they have in their kid, because their kids would be their pension plan. When they get old, their kids will take care of them. So it's similar. So friends and family, when my brother is sick or my sister is sick, even if they don't have any money, they can reach out to me and a couple of our siblings, that we can crowdfund money for them to pay bills and stuff like that. So people should think about hedging risk. Their families and contributions for families play a large role. So that's one part of culture and the mindset of people. Another part of it is also belief, religious beliefs to some extent. So because we're also quite religious on the continent, people would typically, so if you say to somebody, hey, why don't you buy health insurance in case you get sick? Or why don't you insure your car? You just bought a new car. It's a great car. Why don't you insure it? What happens if you have an accident? could be like, God forbid, I can never have an accident. My pastor has blessed the car. So there's a religious component where people, to a large extent, believe that their risks are insured because of their belief in whatever deity, God, Allah, whoever they believe in, that takes care of the. So there's that part, right? So that's another part of culture. And then finally, the operations of an insurance company. Again, because on the continent, there's also some level of social infrastructure like that is. So typically, if in the States, an insurance company can, leverage on already existing infrastructure, post office, railways, you can move across the country easily. You can locate people's houses, they have proper addressing systems, you can sell door to door, stuff like that. Some of that in those infrastructure don't exist on the continent to some extent. So the cost of acquisition is also slightly higher. So for an insurance company, again, you have to figure out, very, very efficient ways, very innovative ways of being efficient. There's so many, from distribution, from creating new products to creating, doing claims management and all that. So obviously we play on that infrastructure, technology infrastructure side. And one of our key areas is on the claims and fraud side. Fraud, waste and abuse, for instance, in insurance on the continent is higher than in most places in the world. And to some extent that is also because the market is early, they haven't put in the proper control measures, IT systems to keep down, things like fraud, filtered to some extent. In summary, you can think about the reason for the penetration cuts across multiple things, from the economics to macroeconomics to the culture to actually how efficient and the systems the insurance companies have in place for running and operating efficiently.
But before we go, here's the answer to this week's Proof of Play question. For a chance to earn some African Tech Roundup token, here's a question you need to answer. What is the average percentage of GDP or GWP, gross written premiums, in the insurance industry in Africa? The answer? 2%. Go ahead and fill out the Google form linked in the show notes with your name, email address, Silo address, and the correct answer to today's question. Again, if you don't already have a social token wallet and Silo address, get with the program by signing up at wallet.socialstack.co. You can share your comment by leaving a 60-second voice note. Until next time.